He has all the answers. Christopher Rupkey, yes. Bank of Tokyo,
Thank you for that,
Mitsubishi. I mean, just remarkable. Let's go to the way you link in fixed income. The new near zero bound, the 2-year yield. Down we go. We had that red sticky yesterday, 0.30. All that lasted for a cup of coffee. What does it signal to you to see the malleability and the push down of the yield curve right now?
Well, I was shocked at that. I've been on vacation, so the last week tumble in the stock market, I think, largely is driving this. The Fed tends to come in when the stock market's in trouble through the global financial market crisis, the Asian financial crisis. It's going to be very interesting what happens next week at the meeting now that stocks are down as much as 12.7%, the Dow.
Here's Jim Glassman. I want to focus on jobs if we can. Chris, earlier this morning on Bloomberg Surveillance, I spoke with Jim Glassman of J.P. Morgan, and I asked him what Washington needs to understand about the jobs report.
Washington needs to understand jobs are not the problem. Jobs are the symptom. And what we really need is a focus on growth, how to get the economy growing, how to make it easier for businesses to do what they do. The GDP comes from our minds. And the problem is, if the economy is this slow, you can't expect to have much job growth.
And then I want to go right to one of the smartest notes of the morning. Rupkey just laying down the line on the double dip crew. Here's this note here. A good definition of recession is 3 consecutive declines, non-farm payrolls. It's not happening. There's no sign it's going to happen. You're just adamant. Forget about the recession check.
Well, I'm trying to be upbeat. There's a lot of self-fulfilling prophecy in this. But yeah, I mean, private payroll jobs were 154,000. The way after ISM went south and approached 50 and the downward revision to first half GDP, people were thinking jobs could go negative. And if you have 3 negative months in a row of that's a recession, but it's not there.
With the pressure the politicians face, which part of the GDP equation should they focus on? Do they goose the consumer? Do we all get a check September 15th?
The consumer is going to be very interesting because, don't forget, a lot of what drove this weakness story, double dip story, was the second look at consumer spending for June. The real consumption expenditures were down. I don't know if we really want to know what's going to go on July, August. I don't know. I think it's too early to write off the consumer at this stage.
It's interesting. So many people, Martin Feldstein mentioning that as well, 3 or 4 months of real consumption just going flat. Is there a why to that? Do we filter it into energy prices, or is there a reason the consumers struggle?
Unfortunately, we seem to have these rolling headwinds, and I think when one of my neighbors said, was there money safe in the bank if we're going to default as a nation on August 2, that led me to think that, wow, everyone out there, Main Street America, is terrified by what Congress is doing with the debt ceiling increase.
Pushback against labor participation down to new lows back to 83, or average duration up to 40.4 weeks. Those are anti-Rupkey numbers. What do you say to the gloom crew now?
Yeah, I mean, you got to really stick with, I know the unemployment rate went down 1/10 to 9.1, but people are going to say, sure, it went down. The actual employment number behind that unemployment rate was negative. People are going to say that Americans are dropping out of the labor force because they can't find work. I don't buy it. Stick with the unemployment rate. Stick with private payroll jobs.
Very good. We wanted to get you on with some optimism here. Chris Rupkey, thank you.